Filing your income tax return is an annual ritual which you cannot avoid. It can get tedious if you are someone who is doing it for the first time. All the paperwork, the terms, conditions, important sections and deductions, there are a lot of things that you should be aware of. And on top of that, selecting the right form is the most crucial step. And if you are a salaried individual, you have to be extra careful as you have to make a choice between the two, ITR-1 and ITR-2. You need to choose the right form based on your source of income, total taxable income, origin of income, assets and so on. Using the wrong form will render the ITR form defective and you will receive a notice to file the revised returns, and further failure to respond in time will result into your returns being treated as invalid. But which is the right form? How to choose between the two? Well, watch this video wherein we talk about the key differences between both the forms ITR-1 and ITR-2. But before we move forward, make sure to subscribe to the Moneycontrol channel. So, for a salaried taxpayer, ITR-1 and ITR-2, both are the relevant forms. Let's dive a little bit deeper into it and find out which is the right one for you. The form ITR-1 is meant for the resident individuals who have an income from salary or a pension of up to Rs 50 lakhs. And on the other hand, form ITR-2 is meant for the individuals and Hindu undivided families earning more than 50 lakh rupees per annum, or individuals who make an income via capital gains from 2 or more house properties and from foreign sources. You can download the Excel utility form from the e-filing website, enter the required information and upload the file and submit the returns. You can also file the returns directly on the portal through the online mode. And as lot of data is pre-filled, ensure that you verify the information before proceeding. Now let's talk about the key differences between the form ITR-1 and ITR-2. So this is what the ITR-1 looks like. As you can see, it is not very complex. All you have to do is check your eligibility for the ITR-1. Choose the form ITR-1 if you are an ordinary resident individual and your total annual income does not exceed Rs 50 lakhs. Total income includes income from salary, one house property and other sources of income such as interest income, etc. Also, agricultural income up to 5,000 rupees is included. If any of the condition is not satisfied, then you are not eligible to file the ITR using the ITR form 1. After confirming your eligibility, just fill the right information, select the right options and disclose the required documents. One thing that you should make a note of is selecting the right tax regime. Decide if you want to opt for a new tax regime or the old one and choose the option accordingly. You can see the option in the part A20 for that. Complete all the parts, submit the form, and if you are using the online mode, cross-check the form thoroughly as most of the information is pre-filled. Now on the other hand, the form ITR-2 is far more complex than the ITR-1. This form is meant for the taxpayers with relatively more complex financial transactions. Choose the form ITR-2 if you are an individual or an HUF. You have an income from salaries or pensions even if it exceeds Rs 50 lakhs, income from one or more house properties, if you have sold equity shares, mutual fund units or property to net capital gains. Income from other sources like winning a lottery, owning or maintaining a race horse is also included. If you are holding an investment in unlisted equity shares, if you are holding an asset outside India, you have to use ITR-2 and not the ITR-1. If you are a director of a company, if you are a non-resident individual or an ordinary resident, or a resident but not an ordinary resident, you have to fill form ITR-2. If you have an income of more than Rs 5,000 from agriculture, you also have to fill the ITR-2. If you have gains from cryptocurrencies, you have to report them in the capital gains. You can use the section Schedule VDA for reporting the cryptocurrency gains or income. However, if you have further sources of income, such as income from business or profession, then you cannot file either the ITR-1 or the ITR-2. You will have to file your taxes using the different ITR form. Moreover, if you have any foreign bank account, ESOP or other securities account, you have to compulsorily file the return using form ITR-2 and report the assets using the Schedule FA. Failure to report could result into severe penalties. Make sure you choose the right form and file your ITR before the deadlines. Delaying it can lead to penalties and your form will be rendered defective too. Hope you liked the video. Do like, share and subscribe to the Moneycontrol channel for more such informative videos.